Hey guys, Toby Mathis here, and I've been doing this for close to 30 years now, and it always comes in at the time at tax season, people lose their minds. And so I'm going to break down the 3 penalties that are out there, and then another trap that gets added on top of some of these penalties so that you don't get hit with an unexpected tax bill. So let's dive right on in. Number 1, when you are earning money as a taxpayer, you are supposed to be paying money as you go. As an employee, your employer does it for you and they pull it out. As an investor or a small business owner, you're supposed to be paying quarterly. And your quarterly is where we get this first type of penalty, which is an underpayment of estimated tax penalty. It's number 3 on my list, but is the first one I'm going to talk about. If you are supposed to be paying on a quarterly basis and you don't want to get hit with an underpayment tax penalty, then you need to be paying, and I'm just going to use the high income standard, 110% of what last year's taxes were. Now, it could be 100% if you're below $150,000. My clients tend not to be, so I am going to use a simple rule. Whatever your tax was last year, 110% of it. So if your tax bill was $20,000, pay $22,000 quarterly over the year, make those payments, and you do not have to worry about this underpayment of tax penalty. This is for people who are not paying taxes as they go. And it's easy to get out of the safe harbor. There's actually 3 of them. It's 90% of the total tax owed. So if you owed, let's just say $25,000, then as long as you paid 90% of that throughout the year, you're not going to get hit with it. Tough to know what our final tax bill is. So what I like to use is the 100% of last year if you're under 150,000, or I'm just going to tell my clients pay 110% of last year. In fact, our tax software, you trigger it and you say you're a high income person, it's 110%. So if I owed $20,000 last year, I'm paying $22,000 over the quarters, and now I don't have to worry about this underpayment of tax. Now, if you do get hit with this, understand that this is just for the period of time for when the tax was owed during the year. So let's say that I had a taxable event in January, so that's quarter 1. That payment is due on April 15th, and I am getting this estimated underpayment or this underpayment tax penalty on that balance until April 15th. Once April 15th hits, that goes away. And by the way, that penalty is usually around 7 or 8%. There's no interest on that one. Now we get to our April 15th tax deadline, right? Everybody thinks my taxes are due on April 15th. Your tax payments are due on April 15th. Your tax return is subject to an automatic extension that makes its due date actually October 15th. So if you file an extension, then you still have to pay your tax. And so there's 2 types of penalties that I want to hit on this. The number 1 is the devastating failure to file penalty. That is 5% per month. It's capped at 25% of your taxes owed. So let's go back to our $20,000 tax bill. I owe $20,000 and I don't file an extension. I could pay penalties for failure to file up to 25% of the amount or a $5,000 penalty. That's what it would be in 5 months. It is 5% per month for 5 months. In addition, I have to worry about the failure to pay. I owed $20,000 on April 15th. I did not pay it. I did not pay anything quarterly. I could be looking at underpayment tax on up till April 15th, and then I have a failure to pay. My failure to pay penalty is 0.5% per month plus interest. And I didn't misstate that. You have a 0.5% plus interest. Now, when you have a failure to file and a failure to pay, that amount per month is capped at 5% plus interest. And interest is going to be anywhere from 7 to 8%, depending on what's going on with the IRS that particular year. So I get hit with potentially these 2. Now, the failure to file penalty is capped at 25%, which if you can do math, 5% goes into 25 5 times, so you have 5 months of the failure to file penalty. Well, what happens in month 6? Then you just have the failure to pay at 0.5%. And then you're owing the 0.5% plus interest. So you're paying somewhere in the neighborhood of 13, 14% per annum, but it's calculated daily on that balance owed. So if I owe $20,000 and I don't pay it, 5 months goes by, I have a $5,000 penalty plus interest. Month 6, now I'm starting to get hit with a 0.5% plus interest until it's paid off. And it just keeps incurring. So I just keep getting higher and higher tax bill. So I could owe well north of $5,000. Let's say it's October 15th and I finally decide what my taxes are owing are, and I pay the whole thing. I'm not paying 20 grand anymore. I'm probably paying closer to $26,000. And that's what surprises people. When they do not file that extension, they get hammered. So you gotta make sure you file. Even when you're coming against that October 15th, many times there's businesses that are they still have accounting questions. Sometimes there's unresolved issues with returns and K-1s and things like that. You gotta file. With the best of your knowledge, you gotta file so that you don't get hit with the failure to file penalty. Now, all of these penalties, you'll notice, are based on tax owed. So if you don't owe tax, you don't really have to worry about this stuff. If you owe a really small amount of tax, then the penalties aren't ginormous, they're still annoying. But if you have a large tax bill, you owe 100 grand, and you didn't make any estimates, you're not in the safe harbor, and you don't make payments on April 15th, and you don't file an extension, you're talking about well north of $25,000 of penalties and interest. You got to avoid doing that. So at a minimum, file your extension. Best advice I can give you is whatever you did last year, pay 125% of it on April 15th. If you have not been making your estimates, please make your estimated tax payments at 110% of whatever your tax liability was last year, unless you get with your accountant and they say you're going to be significantly less and you have some idea of what your tax liability is. I would still use that 110%. Otherwise, if you get with your accountant and you guys just say, here's what we're actually going to do, and you're going to pay, and you're going to make sure that you paid at least 90% of the tax liability through your estimates, then you can avoid the underpayment penalty. Otherwise, I'm using that 110%. So best practice, pay quarterlies at 110% of last year. Make sure that you pay something on April 15th of about 125% of whatever last year's was. Add in whatever you paid, you'd subtract out of that amount, but I would want to pay 125% because people's incomes tend to go up, and file your extension. That's the best advice I can give you. Good luck till next time.